Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right. So today I want to talk about some things you need to know about not filing your taxes. Over the past couple weeks, I've been hearing all of these reasons about why we ain't gonna file these taxes. So I'm gonna talk about that and kind of let you know what happens in, this whole tax thing, because I think it's a lack of education that really causes us to get into more trouble than what we really should be. Okay. So first of all, not filing your taxes. I have people saying, okay, I'm not going to file taxes because I owe. All right. Not filing your taxes is not going to make the tax debt go away. All right. You actually incur more penalties. So you incur the failure to file penalty and also the failure to pay penalty. Now, if you file an extension and then you file your taxes before the October 15th deadline, then you don't incur the failure to file penalty. You will still incur the failure to pay penalty because your penalties and interest start accruing April 15th. Okay. That part doesn't go away, but that failure to file penalty, it really does add up. And like I told you, when it comes down to this interest, the interest compounds and is added daily. So that interest really starts to rack up. So this is why you don't want to just sit here and, and just do nothing. Okay. And you don't want to just not file, because that failure to file penalty is just adding on more money to what you're going to owe. Now, there is a thing that's called an SFR, a substitute for return. And that's where the IRS says, okay, cool, we just gonna file something for you. They might have a W-2, they might have a 1099-R, they might have a 1099 miscellaneous, and you haven't filed anything. So what they do is go plug in some numbers and say, okay, this is what income has been reported. This is what your standard deduction is. Based on that, this is what you owe. Okay, that is not the same thing as you filing your return. Even though the IRS may file a substitute for a return for you, you still need to file your return. And so you might come up with whatever they come up with, and you might not, but they don't give you any other deductions, whether you might be eligible for, some type of tax credit or any other types of deductions. They're not going to give you that. They're just going to say, okay, here's this income. Here's the standard deduction. This is what you owe. Send us a check. So just don't be fooled into thinking that a substitute for a return means, okay, the IRS has just done it for me, so I don't need to do anything. Absolutely not. Okay. Now, the other thing that I've heard, y'all, sometimes this stuff's it just takes me out. Okay. The other thing that I heard is I'm not filing because the IRS is going to take my refund anyway. Now, here's what you need to know. So if you were to do a refund, you have 3 years to claim that refund, or the refund becomes the property of the Department of Treasury. So if you're worried about your refund being taken, and applied to child support, student loans, or estate tax debt, or something like that, this is where you're messing up, because if you have those things, again, they're not just gonna vanish. They're not gonna go away. So filing your tax return and then having your refund applied to that debt is only going to help you. Not filing and letting the IRS keep your money and it becomes the property of the Department of Treasury. Did you hear me say they're going to take your refund and apply it to your tax debt? No, you did not hear me say that. So if you are going to get a refund and they're going to take it, then let them take it and apply it to something that pertains to you, not become the property of the Department of Treasury, and it does nothing for you except you continue to be a habitual non-filer. Okay, so if your refund is going to get withheld, then let it get withheld and put something, put towards something with your name on it and not the Department of Treasury. Now, and so going back to folks that are like, okay, I owe, so I'm not going to file. You have to file them returns at some point. Okay, whether you like it or not. Now, here's what happens. You have this, you haven't filed taxes for years. And then you go to a tax person and then you think you're going to get 5 returns filed for the cost of 1. Not going to happen. Okay. Now, the IRS, in order for them to even want to work with you, you have to file all of your taxes. So it doesn't matter if you file them now or you file them later. But just know if you wait until later, it's gonna cost you more, right? Because like I said, instead of you paying for one tax return per year, you got to pay for 5 at one time. Yeah, that costs. And then the expectation is, well, you should do this for a discount. No, that's not how it works. 5 returns is 5 returns, whether we do them in 1 year or over 5 years, still 5 returns. Okay. But what did I tell you? Prevention is cheaper than the cure. So when you're dealing with back taxes and having to file all those taxes at once, it's going to cost you more at one time and you're going to feel it more, right? That's just the way it is. So go ahead and file your taxes. And then if you have a tax debt that you can't pay, then that's when the IRS will work with you. The IRS is not going to put you in jail because you have a tax bill that you can't pay. Now, understand that the IRS has 10 years to collect a debt. Now, states, however, have up to 20 years to collect a debt. I've seen a wide range of 10 years up to 20 years for states to collect the tax debt. So your state might be a 20-year state. You could have a 10-year state. You might have a 15-year state. Every state is different, okay? But just know that states have up to 20 years to collect the tax debt. So when you see those commercials on TV, now let me talk about this. And you see the commercials and you see the people sitting there, oh, happy, so happy, like, oh my gosh, we owe the IRS thousands of dollars and this company settled for pennies on the dollar and we wrote a check for $200 and we're all, listen, there's some caveats to that. See, the way that the IRS works is they look at your total picture. They look at what kind of assets you have. If you got an IRA, if you got a car, if you got a house, if you got investments, whatever. Even if you have a cache of weapons, okay, if you like a gun enthusiast, okay, this is what the IRS is looking at, your assets. And so you are not going to have assets and not pay your tax bill. That's not how the IRS gets down. So when you see these commercials where people are talking about they owe thousands of dollars and then the IRS settled for pennies, that these people have nothing. They don't own a home, probably don't own a car, probably just, are fortunate to have a job, right? And so don't sit here and think that you're going to keep all of your money and then not pay the IRS for your tax bill. No. So do not be fooled by that. There are numbers that the IRS, there's a whole, lot of forms and stuff that you have to fill out for that. This is why we tell you to hire someone to help you to do this stuff. Okay. But when they go through and if the IRS says, okay, based on this, we can get our money in 10 years, they're not willing to deal. The states, hey, if we can get our money within 20 years, we're not willing to deal. And when it comes down to settling tax debt, you definitely want to take care of your state first because the state usually comes at you like a piranha. And where, like the feds will come for you, but it's kind of like Jaws, right? You hear the music coming first and you just hear dun it, dun it. And then it might be 15, 20 minutes before the shark even shows up, right? But with the state, it's a little bit faster. I won't say a little bit faster, a lot faster, because the state will garnish your wages faster than the feds will. That's just what it is. And so, in this whole process of dealing with tax debt, you're going to get letters. You're going to get letters from the IRS. You may get letters from the state. Open the letters. Because you not opening a letter does not mean you did not receive said letter. What it does, though, is if you don't open those letters, because those letters have respond by dates. And if you don't respond by those specific dates, then you basically force the IRS to enforce the tax law, which means they need to take further and further steps. So if you wake up one day and you're like, oh my gosh, the IRS suddenly took money out of my check. No, there were some letters that you didn't open. that that you ignored, that you did not respond to, and there was a lot of those letters before you get to a wage garnishment. So the IRS follows a process. It's not that you wake up one day and then boom, they're just garnishing your wages. No. That's not how this works. Only in extreme cases would something like that happen. Otherwise, yeah, you're going to follow a process. So as long as you are in contact with the IRS, if you have a payment arrangement going on, and if something happens and let's say you can't pay your bill that month, as long as you're reaching out to the IRS to let them know what's going on, they're going to be willing to work with you. But it's when you don't respond at all that you force them to enforce the law. That's their job. It's not that the IRS is coming to get you and all that. They got something out for you. No, they have to enforce the law. That's point blank, and that's it. Right? So listen, not filing for me is not an option. Okay. You need to file your taxes. And if you got something that you can't deal with, that's when you hire professionals to help you. If you got a tax bill that you can't pay, you're going to have to hire a professional to help you try to resolve that tax debt. And believe me, if you wait, the longer you wait, the worse off it's going to be. And oh yeah, last thing I'm going to say about, dealing with tax debt and not filing. If your tax debt exceeds $50,000, the State Department will suspend your passport. Now, I don't know about you, but I kind of like moving freely about the country and about the planet if I want to. And for some people, you're like, oh, well, I don't go anywhere anyway. Listen to me. The last thing you want in your life is to have your passport suspended. Your passport is more valuable than your birth certificate. Okay. And if you don't have a passport, go get one. Okay. You need a passport. So if you do decide to go somewhere, you can. Okay, you guys. But that's it. The bottom line is this. Not filing is not an option, at least in my opinion. It just costs you more in the end because you're going to have to file those taxes anyway, or you're going to be paying those penalties and interest. So you might as well, do what you can to reduce that amount by filing your taxes, working with the IRS. You might have to increase your withholdings. You might have to pay some estimated tax payments, whatever that looks like. Listen, nobody likes paying taxes. I don't care who you are. Nobody likes to pay taxes, but hey, it's not going away. And usually when I have videos like this, there's somebody that gets on here, show me the law about the tax. Listen, the IRS is tired of that stuff. So the federal government is getting tired of that stuff. I'm going to let you know. So even though you might go and fight that fight, if you come to Lusandra, understand, I'm going to tell you to file your taxes. I am not going to help you commit tax evasion. That's not what I do. Okay. And any other reputable tax person is not going to help you commit tax evasion either. Because orange is not the new black. Okay. Yes, the government wants and they will get their money, whether they get it from your paycheck, whether they take your assets. And listen, here's something else, and I'm a hush, I swear. Don't be sitting up here trying to be hood rich and getting everything in everybody else's name, thinking that the IRS ain't going to find out. Don't be trying to put stuff in your mama name and your grandma name and your sister name and all this stuff. Because see, the IRS, they go, the known associates and relatives, they go pulling those credit reports, you guys. The IRS pulls credit reports. And so if the IRS sees, okay, you know what? Grandma's sure living in a nice house. And grandma ain't making no money. How is this happening? And then they go through this thing called forensic accounting. Forensic accounting is when they go follow the money and find out where stuff is going wrong and being done illegally. So forensic account, that's how Paul Manafort and Michael Cohen and all these people get caught up in tax evasion and stuff. Forensic accounting is what it's called. And so when they go through and try to file and find this money that is tied to you, that, sir and ma'am, is tax evasion. And that's what you will go to jail for, trying to hide money and not pay taxes on it. You're not going to go to jail if you have filed your taxes and you can't pay your bill and you're working with the IRS however that works out for you. Okay. Is when you try to hide money. That's when you go to jail. Okay. So that's it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I'll see you next time. Bye.